Hello, how to complete Form 1120S, U.S. Tax Return for an S Corporation for 2021. You will first go to irs.gov and then you just type Form 1120S and click on the search icon. We usually have the link to those forms on our blog ninasoap.com as well. And here I will suggest you download the form and the instructions. And while you are here, you could scroll down to see if there will be other forms that will be related to your business. So instructions for Schedule K-1 Form 1120S is a good one to download as well because you will complete it. And you can look for the instructions to that form, and I'm not seeing it here. So you will tap Schedule K-1 Form 1120S and search it. So you will have the form and you'll have the instructions. So you download both to save in your file. That way you'll have it on hand to go through it. So how do you complete Form 1120S? First, enter your business name, your business address, city, state, and zip code. Enter online day, employee identification number, EIN number. Online E, the date you incorporated your business. It may not necessarily be the it will be the pretty much the date you started the business, and in column A as election effective date. So both may not be the same. If you created an LLC and then file with IRS to be taxed as an S Corp, both dates may not be the same. In online B, business activity code. So you will enter that code, and that code will be, let me see here. That code will be at the end of the form, the instructions to Form 1120S. So if you have the instructions on hand, and I do have a bit, I have a video on how to find the business code for your business if that's an online business, a retail business but online. But you'll find it at the end of Form 1120S. And if you have an online business, then that will be under retail. If you have a retail business, it will be under retail, but for non-store retail trade, but for non-store retailers. So that would be, you'll just follow the retail trade to close to the end. So non-store retailer section is where you'll choose a code for your online retail business. So if line G, if the corporation electing to be an S Corp beginning of this tax year, so you will choose H. Check if that's final name change address. So if none of those apply to you, you just leave it blank. I. Enter the number of shareholders who were shareholders during any part of the tax year. In this example, we have 5. So if you are aggregating activities or you are grouping activities, you will check. And there is more instructions on that in the instructions to the form, what grouping activities means and aggregating activities means. In this scenario, we left it blank. Excuse me. So income 1A, gross receipts or sales. That's your total sales during the year. So if you are tracking your sales well, you will enter on line 1A. Return during the year, you'll enter that on line 1B. The balance will be line 1A minus line 1B. And we have it here. Cost of goods sold, if you sell online or you have a retail business, chances are you'll have inventory as well. Therefore, you will complete Form 1125A. When you are filing your tax, and just the same way we look for Form 1120S, you'll tap Form 1125A and you will complete it. So when you are filing your tax, you might want to have a folder for your tax forms, and you could have a folder for the document you are using. So let's pull a document here that our example is based on. So let's go back here. So Form 1125A, cost of goods sold. So line, you'll make sure you enter your business name and your business identification number. So line A is inventory at the beginning of the year. If your business is new, that's your first year, then that line will be 0. That it will be left blank. But if it's not your first year, then you'll have a number there. Purchases. So you'll have your purchases, and if you have anything associated with it, you'll add it, but I usually leave those blanks. Line 6, it will be to total all the line above. And line 7 is inventory at the end of the year. So you will track your inventories to be able to complete Form 1125A. And the difference between your total beginning of the year, purchases during the year, minus inventory at the end of the year will give you the cost of goods sold. And by inventory at the beginning of the year, purchases, we are not talking about quantity, we are talking about the cost. And line 9A, check all that apply. Check all methods used to evaluate your closing inventory. And pretty much you can read through it, but here we left everything. And then line E, if property is produced or occur for resale, do the rules of section 263A apply? We said no. Line F, was there any change in determining quantity, cost, or variation between opening and closing inventory, we say no. So you can read the instructions below to how to complete your inventory. And there is something to consider here. If you have an LLC, that's as an S Corp, and you are selling a product that you can use yourself, it might be a good idea to purchase it from your business. If you are taking things off shelves for your personal use, it's like a distribution to you as the partner of the business. So you'll add the value of those later on. And I believe it is explained somewhere in the instructions. But yeah, if you read through it, you'll be able to find it somewhere. So to avoid that, you might just, pay for, be a customer of your own business. So now that and if we are wondering how we come with those numbers, you should track your inventories during the year and you can have a tab where you can summarize all of them. So beginning of the year, you will pull it out of your spreadsheet, inventory purchases during the year, cost of goods sold, year-end inventory. So if you are tracking your sales and your cost of goods sold, you should be able to have those information on hand to use to complete Form 1120S. So pretty much what you will track will be inventories at the beginning of the year, you can choose how you wanted to track it, but track inventories at the beginning of the year, track your purchases during the year, and track your sales as well. But track your sales in a way that the tax paid, you can track the tax paid, refund, but make sure you know the gross sales as well. So this refund column, for example, is now completed because it should not be there. It is asked for later on, so it's good to track your total sales before the tax you paid or you charge, or the platform you are using to sell charge your customers, because those should not be in your gross receipts. Those are returned to the state. They should not be in your gross receipt. Your gross receipt is the total sales before the tax is applied, and then you have a column for the return so that it is easy for you to find those. And while you are recording those, it might be a good idea to track the cost of goods sold as well. Okay, so now that we completed Form 1125A, we will go back to our Form 1120S. So the gross receipt, we went through that, and you'll find it on the spreadsheet as well. The return and the cost of goods sold and the gross profit in this example. So those numbers have been used to complete the income section of Form 1120S. So if you have other income or loss, you will add it as well. If you have a net gain or loss from Form 4797, you'll add that as well. So total income or loss will be to take your balance minus the cost of goods sold, which gave us the gross profits plus any other income you might have added to your form, and that will give you your total income or your total loss. And in this example is $44,228. And when you are completing the form, you might want to round. So if something is 4,427.50, it will be 4,228. Anything below 50 cents will be round to the like $4,227.40 will be 4,227. So now that we completed the income portion of the form, now we will complete the deduction portion. So line 7, compensation to officers. So there is, in some instances, Form 1125E is required, and that's if the officers earn a higher income, and there is instructions on that as well. But for low dollar amount, it is not needed. So when you pull the form, you'll see that information on it, or you'll read it in the instructions as well. In this case, it is not required. So yeah, so if you are working in your own business and you are paying yourself, it might be a good idea to track how much you are paying yourself, and depending on whether you have a cash accounting method or accrual will determine how you will report some of your expenses. And in this scenario, it is a cash method. Usually, if that's your first year of filing a tax return for your business, that's the time to choose what kind of accounting method you wanted to use, cash or accrual. Usually LLCs or S Corps use accrual method, but for small business you have the choice, and in this example it is a cash method. So in that case, the gross compensation is different from 300, but 300 is what was paid, was taken home. So what was withheld from the income was not deposited by the end of the year. Therefore, I didn't deduct it from the tax return because we are using the cash method. But then on line 12, taxes and licenses, I included the withholding from compensation of officers from the previous year, just like the withholding from this 300 will be deducted in the following year as well. So line 8, if you have employees in your business, their salary will go on line 8. You as the owner and the shareholder and officer of your business, your salary will go on line 7. If you have an employee, it will go on line 8. If you have any repair or maintenance made to your business office, it will go on line 9. Bad debts, line 10. Rents, line 11. Taxes and licenses will go on line 12. Interest will go on line 13. So depreciation now claim on Form 1125A or elsewhere on return. Attach Form 4562. So it's not in every case you'll attach Form 4562. So when do you complete Form 4562? If you are an LLC tax as an S Corp and you are you place in service, you place new asset in service during the year, then you'll complete Form 4562. It's a good idea to pull instructions to publication 946, I believe, depreciation publication and retreat, and then instructions to form 4562 has some instructions there as well. The publication will tell you in what case you will complete a depreciation form. And I believe for lease property, if you are related to car, your personal car used in the business, if you are claiming depreciation on it, I think there is some instances when you have to file Form 4562 every year. But again, as an LLC tax, as an S Corp, you might want to read more about that business entity to know that, you know, there is some expenses that it is a good idea to use reimburse employee reimburse account for it. So you reimburse the partner for using the asset. So you might want to see what will fall underneath that. So depletion, advertisement. So if you have advertisement cost or advertising cost, it will go on line 16. And then other deductions. So let's take a look at the depreciation form here. There will be another video where we'll go more deep in the depreciation. And we do have two forms here. Okay. And if you don't have anything to track your depreciation, your assets, depreciable assets, we have at liberdownload.com depreciation spreadsheet. We do have two of them, and here I'm using depreciation summary tab, and it was pretty much enough for me to that will be the depreciation summary spreadsheet. So it was enough for me to track the assets throughout the year and then calculate the rate and calculate the depreciation. And I like to calculate the depreciation for the asset so that I have it all set up, you know, for the total depreciation to match the cost of the item being depreciated, or the basis for depreciation. And I will add some rows so that it is printable, and I will print it and save a copy in a folder that I have long-term assets in. That way I know that all the assets purchased in 2021, for instance, have all the depreciation deduction calculated for them. So every year I will just know the year and the tax, the deduction that I will take for it. So having that, there is another spreadsheet where I like to track the depreciation taken every year as well, because you have to remember that if you are depreciating assets, you place assets in service during the tax year, you have to remember, if you place assets in service during the prior years, you have to take them into consideration when you are calculating the depreciation deduction. So pretty much in this spreadsheet, I like to find the asset depreciated in prior years, and then assets placed in service during the year to come out with the depreciation deduction for the year. Excuse me. And I know that my depreciation total for the year is going to be in the column that I highlighted, or that I click on. So now let's go to having the depreciation information on hand. Let's go to the depreciation sheet. And if to find the form, you'll just tap it on the IRS website, Form 4562, Depreciation and Amortization. Excuse me. And let's go back to, okay, let's go through it quickly. So first you'll enter your business name, the business or activity that the asset is used in, and then you'll have your business identification number. There is section 179 where you can expense all the costs of the depreciable asset. You can deduct all the costs associated with it as well, and I'm not going to go through this in this video, but if you want to do that, you might want to read the instructions, and there is some limitations as well, but that will go on part 1. And if your business is new and you're not generating a lot of revenue, it may not be a good idea to file section 179, because you might want to benefit much from it, but if you make a lot of profits, then it might be useful for you. So it just depends on your business scenario. And claiming those depreciation to expense your depreciable asset in the year you purchase them might find interesting to lower your profits. But again, if you need your business tax return to apply for a loan, for instance, and you are negative on your tax return, then the bank may not use it, may not take your business into consideration. So that's something to consider as well. It's just not that obvious, but you have to think a little bit past the present to, you know, to make the right decision. And there is special depreciation allowance as well that you can claim, and there will be instructions on that. And I will have another video to go to explain more about how to complete Form 4562 part 3. I will only focus on part 3. So line 17 pretty much is just asking the deduction for the prior year before 2021, and in our example is 98. But then line 18 is for asset placed in service during the year. So the way it works is you have the choice to group assets. And in this example, we have assets in we have 5-year property class assets, and we have 7-year property class assets. You group assets if they have the same property class, they have the same recovery period, they are going to use the same convention, they have the same depreciation method. You can group them. So ours could easily be grouped between line 19B and C. but I do not like to group assets. And the reason is, if you group assets at the beginning of your business and later one of the assets you don't feel like you want to use it anymore in the business and you take it out, you are not going to change the depreciation deduction you calculate on it, but the depreciation deduction are associated with that particular asset, you have to report it on another form as an income to add it back to your business, to your return income every year. And I believe it might go on Form 45, Form 4797 that we come across in the income section. Not sure, but yes, it'll go on a form. And to avoid completing other forms, I prefer not to do that. And the same thing will go with section 179 and special depreciation allowance. So if you take those depreciation to, especially section 179, to expense the cost of your assets in the year you purchase them, the total amount, and those assets were supposed to be depreciated in for 5 years, and then after year 2 you decided not to use them, then the remaining 3 years of deduction that you took already, you have to file a form to add it back to your business return as an income. So taking those deductions might be great, but if that will create more work for you to the point that you might have to hire a professional to file your form for your return for you, you want to see if that is really, if that's beneficial to you or not. And I just like to keep it simple and not taking those special depreciation. But then I will add an attachment when I will explain it that we elect not to claim them. Okay, so now, because we are not going to group assets, we are going to file multiple Form 45-CC2, and it is time consuming the first year, but then after the first year it will go on line 17, so it can just be grouped together. But if we are not going to group it, then we have to file multiple. You can attach a form based on the instructions, but I just prefer to use multiple Form 45-CC2. So for doing that, we will keep one for the summary, and that's why I put summary instead of business or activity. And in the instructions, if you have multiple activities under one business, you might want to file Form 45-CC2 for each business activity. That's the requirement. So in this, they are all related to retail. So how do we complete that? First, where this 98 came from. So we'll go back to our depreciation spreadsheet, especially. Okay, so let's go to the depreciation summary, and 2020, for instance, will have is depreciation as well. And having a calculator already, I will just take the number, and I believe that number should be on our print, and that will be for 2000 assets placed in service in 2019, 2020. But it was not the only year we placed assets in service. So therefore, we will pull the record and another list of assets placed in service, and because we recalculate those, depreciation, we just look at the year we are filing for and take the amount. So you'll summarize that, and let's go back to our total asset placed in service prior to 2020, and what I just selected was total to 3467. So plus 6376 will give us $98.43 and rounded to $98. And in 2021, and the summary sheet that we are using, we just copy it back down to this one so that we can print what we used to file 2021 return. So the prior year will be summarized, but the current asset placed in service during the year will have the list of them, the rates we use, and the total for the deduction for 2021, and that total to 236. But because we use that information to file form for a 562, we have them here. So now let's go back to our form. So that's how 98 is. So now, for instance, if you want to file the form for each one of those assets one by one, we can just copy this form. There is a way to do it so that it goes a little faster. So when you complete one, let's go to our asset here. I'm just going to pick few to work with. And let's try probably that. That just two. And we'll have another video to go to explain how to come up with the rates and the deduction. But for now, how to complete the form for the 562. So the first one we will work on, don't know if we'll work on all of them, but let's take the rotary cutter. So we will can just put one, and I'll put rotary cutter. And I just save it. So that will have your business and the business identification number, and the business that is using it. I will keep everything capital letter. Is a retail. Okay, so and we will keep it like that, and it won't have line 17 here because we put it on the summary. We won't have anything on the summary section either, and this one has amortization. We won't have amortization section completed. We want to complete that on one form, the summary form. So we will take those from the additional forms that we use. So now that we clear the form, let's go back to our item, and that's the first item. The basis for depreciation is $12.49, so that will be 12. Basis for depreciation. and that will be 12. Recovery period. Recovery period is GDS 5. GDS 5. Or 5 years. Let me see what they ask next. Convention. So convention is half year. And what else they ask? Method. Method, we are using a straight line. So convention, half year, and SL. And the depreciation deduction. The depreciation deduction is going to be $1.25, which is $1. And that's pretty much what will go on this form. So if we started from the beginning, we can only fit 1 5 year on one form for the 562. So you'll have multiple forms, and where you have 5 and 7, you can put those on one form. That's why I wanted to try that. And then you can have, 5 and 7 on one form and all the 5 on separate forms. So you'll end up with multiple forms and probably 15 of them. So, and this one is done, you will save it, and then make sure you save it, and then you make copy. And let's see the one that have 7 and 5. And by naming them, you'll be able to compare them later. So we have coil, crimper, and international plug adapter. So we can call it, we can just put 2 coil C and then adapter. Okay, so in this one, it's retail as well. Nothing is going to change there, but the basis and the deduction will change. So for the coil crimper, the $21.69 is the amount. So $21.69 will be 27, and the deduction for that is $2.17. So that will be $2. And for the 7-year property, it will be the one right below it. It will be $23.53, which is $24. And this will be GDS 7. Convention was half year, and we are using straight line. And we have the information on the spreadsheet. We are just copying the information to the form. And $1.68, which is $2. And we will save it. And so pretty much that's the way you will complete all the form. And then you will total, you'll double check everything, and then you'll total the deduction there, and they should match the deduction you are taking. Sometimes it might be a few dollars off because of the rounding. It will be that. And then you'll have the summary tab, which we have before, that has an idea for the prior year, Let's go back to that form. Excuse me. So then you'll create a summary, and the summary will have the prior year on line 17, and you leave 19A section asset placed in service during the year. You just leave it blank. And section C, the alternative depreciation section, and part 4 summary, you have line 21 listed property. So if you have listed property, you will complete part 5 for those, and there is instructions on those listed property. And then line 22 total, you'll add line 12, line 14 through 17, and then line 19, which we have on separate forms, and line 20 and line 21, and in our case is 334 because of the rounding. It is $1 shorter. Okay, so now we do not have anything for listed property, and listed property is just pretty much those items that you can use for personal purposes and for business. So those items could be entertainment items, asset related to entertainment, like video related and photography related. And we do have a camera in our depreciation asset, but we didn't put it under listed property because there is an exception for items that can be considered listed property. Those are assets that you can use for personal, and then you can use it for business. So those assets, they goes under listed property. But if you keep it in your business, look at your business location, and you use 100% for your business, then it's not a listed property. And your business location can be your home office. So if you have those assets that can be classified as a listed property and you use it just for your business, you want to keep it at your business location so that it does not fall under listed property. And listed property will include your car that you will use in your business as well. So there is rules about it that you will read if you are going to do that. So now amortization, we have a software that we purchase, one-time fee. You pay for once for it, and it could be classified as 179 intangible, but it is an exception of it, so it is not included in that list. So if you go to form for instructions to form 4562, they talk about amortization there, and it was not clear whether you should depreciate it or amortize it because they talk about it under depreciation. But yeah, pretty much you use 36 month and straight line, which in fact will imply depreciating it. And that will fall under 3 years. But again, a 3-year property class does nothing talk about software, and software is intangible, so therefore I amortize it. So, and yeah, there is calculations related to it, but so pretty much amortizable amount, that's the amount you purchase it. Date amortization begins will be the date you place in service, and in this scenario it could just be like December 1st, so therefore 1 month in that year. And the code, so because it was not included in section 197 intangible and does not really have a code, I just put other than 179 intangible. And amortization period or the percentage. I just put the period, which is 36 months, and amortization for this year will be calculated. So pretty much what it's going to be is, it is 38 times 1 month divided by 36. So we do have a spreadsheet to track that. And so 36 months, and the first month is just the number of months you use it during the year divided by the total month that you are going to depreciate it. And the second year is going to use 12 months divided by 36. And when you do that, you are going to go through 4 years to reach 100%. So then you know that you did it well, and then you will calculate the depreciation, and the total of them should match the cost of the item. And pretty much it's taking the cost of the item times the rate. And having a really makes it just simpler to look at it and just complete the amortization session. So that's how the summary was calculated. So now that we have the amortization deduction for the year will go on the line 19, other deductions on Form 1120S. But the depreciation summary, line 22 of Form 4560